Hi, this is Paul Bosley, the founder of Business Finance Depot, and welcome to our third and final video in this series. And we're talking this time about how to fill out the sources and uses of funds form. Now, this is a form that you're going to find very useful once you've selected a franchise, because what you're going to be able to do is first identify all the money that you're going to need to open up the business and run the business, and then where you're going to get the money from. So my advice is always to kind of make believe that you're Bill or Melinda Gates and you got more money than God, and just concentrate on what you're going to need the money for first. The first is if it's a business acquisition, how much is the agreed price to buy the business? If it's not a business acquisition, obviously it's a zero. The next thing is you're going to look at how much working capital are you going to need when you run the business. My advice is, generally speaking, to figure out how much money it's going to cost to run the business before you break even in month one, and then multiply that number by 3. So when you open up your business, you have 3 months of working capital. So if you think you're going to need $25,000 a month to run the business, times 3 is $75,000, and that's the number that should be in working capital. And this way, when you open up your business, when you look at your checking account, as you open up day one, you're sitting there with $75,000 worth of business, or worth of money in your business. The next thing is, are you going to have a franchise? Are you paying a franchise fee? If there is, how much money do you need in your franchise? You put that in. Next, are you going to have build out? If you're going to have build out, then usually you should quantify that and then realize in total how much you're going to need for build out, regardless of whether the money's coming from you or the landlord. And it's always a good idea to add a contingency on for maybe somewhere between 5 or 10% of the construction cost, because there's overruns. They might estimate how much it's going to cost, but then it might come out to be more than that. Next is the equipment. How much equipment are you going to need? And when you put equipment, don't only just put the equipment you're going to need to run the business. So for instance, if you're a signorama, as an example, you're going to need sign making equipment, but you're also going to need equipment like sign on the front door. You might need audio visual equipment that's in the space itself. Your furniture, as an example, in your lobby. All the equipment you're going to need should go into the equipment line. The next thing is you might have to do some pre-sales marketing before you open, so that maybe you join the Chamber of Commerce, maybe you run some ads, you let people know that you're going to be there, so this way you have that money accounted for. And then you're going to need probably some inventory. If you're selling something, you're going to need money for inventory, so you're going to want to make sure that you have the money listed, what you're going to need for inventory, so when you open up, you have that covered. And then finally, you're going to probably need to have some money that you put away for your security deposit for your landlord, because when you sign your lease, as a general rule, you're going to need to come up with usually 2 months of security deposit that your landlord's going to want. So now you've totaled up all the money and you figured out what are the uses of funds. So now that you know what the uses of funds are, you have to concentrate on the sources of funds. So on the sources of funds, some of the money, like I said, might come from your landlord. Your landlord might give you what's called a TI allowance or a tenant improvement allowance. So that money should be registered, because that's going to go towards your construction. You might have money that you're going to put in, or you're going to have money you're going to put in yourself. It might come from your checking, your savings. It might come from your retirement account. Wherever it's going to come from, that's money that you're going to record, that you're going to put in, and that's counted as equity. As a general rule of thumb is you're going to have equity in the project of somewhere between 20 and 30% of the total project. So if you don't have that much equity going into the project, you're probably going to need to put the project on hold and get a partner. It could be, or you could get a gift letter from a parent or someone that loves you, somebody in your family, where it's actually a gift. It's not a loan, it's a gift, so that equity goes in, and you're going to have somewhere between 20 and 30% of equity. So once you have the landlord allowance, the TI allowance, and your equity injection, the balance of it's got to come from debt financing. And you really have 2 main ways of doing it. The equipment can be leased. That's a possibility. So you might be leasing the equipment where you own it at the end, or the final one would be a loan, some type of a loan, whether it's an SBA loan or an alternate loan. But in total, you should have the same amount of use of funds as you have source of funds, so that they equal. So when you fill out the form, the total of both of these columns are equal, and now anybody that's looking at it knows not only what they need the money for specifically, but where you're going to get it from. Thank you for listening to this video. Again, this is Paul Bosley, the founder of Business Finance Depot, and we look forward to serving you in the future.